In this video, you're going to learn about Vanguard VEQT ETF, a Canadian all-equity ETF portfolio. Hey, what's going on? I'm Chris Liu and I'm the creator of WealthAwesome. If you're looking for a passive all-equity portfolio ETF, Vanguard VEQT could be a good option for you. VEQT is part of Vanguard Canada's popular portfolio series, which provides a simple set it and forget it strategy for ETF investors. So let's take a look at what's under the hood with this Vanguard VEQT, and I'll do a full review here. So as of now, Canadian ETF assets are over 200 billion at the start of 2020. So ETFs are exploding in popularity, and VEQT as well. So what is Vanguard VEQT ETF? VEQT is a low-cost exchange-traded fund, or ETF, that's been offered by Vanguard Canada since January 29, 2019. So it's a pretty new ETF. The fund is part of Vanguard's portfolio series, otherwise known as an all-in-one solution for investors looking for low-cost passive investing without having to worry about rebalancing. VEQT holds 419 million in assets under management as of August 31st, 2020. So what does Vanguard VEQT invest in? VEQT is made up of several different Vanguard ETFs and is designed to give you worldwide exposure. So VEQT aims to invest 100% in equity. The fund includes worldwide all-cap indexes and even emerging markets. From the breakdown below, as of August 31st, 2020, VEQT has 71.9% invested in Canada and the US, with 20.5% in developed all-cap outside of North America, and the remaining 7.6% in emerging markets. VEQT Vanguard Sector Weightings. The worldwide exposure gives VEQT a heavier weighting towards financials, industrials, technology, and consumer goods and services. So contrast this with the Canadian stock market, which is really top heavy, with the top three sectors being financials, materials, and energy. So it's a completely different asset mix than the Canadian stock market, which I think is great. Vanguard VEQT MER. The management expense ratio, or the MER, is a reasonable 0.25%. Considering that mutual funds charge on average of over 2% per year, and it's easy to see why many Canadians are choosing ETFs over mutual funds. It's almost 10 times more expensive to invest in a mutual fund than it is with VEQT. VEQT asset allocation and performance. VEQT targets a 100% equity and 0% fixed income asset allocation. It doesn't have much performance history, but there shouldn't be many surprises here. The fund should perform accordingly to the combination of its underlying ETFs. And currently there's no benchmark data for VEQT yet because it's too new to the market. Vanguard VEQT Holdings. Because of the heavier weightings to Canada and US stocks, VEQT Top Holdings are some of the biggest stock names in Canada and the US. And it holds mostly banking, tech, oil and gas, and energy stocks in its top 10 holdings. And you'll probably recognize a lot of the names here. Vanguard VEQT Rebalancing. Because it doesn't have fixed income, I don't think the rebalancing is as effective as other portfolio series, but you still are rebalancing the asset mix and the country allocation. So it is pretty useful still. Vanguard VEQT versus other funds. So VEQT versus VGRO. VGRO is Vanguard's growth portfolio ETF, and it also consists of many other Vanguard ETFs. The main difference with VEQT and VGRO is more conservative and it has an 80-20 split between equity and fixed income. You could read my full VGRO review on my blog or check out the review that I did on my channel. VEQT versus XAW. iShares XAW is BlackRock's all-equity portfolio, and it excludes Canadian investments. If you don't want any Canadian stocks in your portfolio, you should consider XAW instead. VEQT versus VFV. Vanguard VFV is an S&P 500 ETF fund offered with a low 0.08% MER. The fund only invests in American stocks, so it's less diversified than VEQT. It depends on what you want exposure to and how you're using the ETFs in combination with your other investments. VEQT is self-allocating, so there's no need to rebalance, which is why the MER is a bit higher. I've also done a full video on VFV, so make sure you check that out. Who should buy Vanguard VEQT. Well, if you want an all-in-one passive investment portfolio that gives you exposure to the entire world, consider VEQT. You also won't spend any time rebalancing your investments, and make sure you understand the risk involved with purchasing a 100% equity fund, and you're using it in combination with your overall investment strategy. It's a very versatile fund. If you want 100% exposure to equities and have a very high risk tolerance, consider VEQT for your entire portfolio. Or you can combine it with another fixed income ETF to balance out your risk. How to buy Vanguard VEQT ETF. I've been using the discount broker Questrade for all my stock and ETF trading for the past almost decade now. You could buy all Canadian ETFs like VEQT for free on the platform. If you want to trade stocks, get $50 in free stock trades with this offer in the description below when you open an account at Questrade. VEQT is part of Vanguard's fantastic portfolio series, and I'm excited to see more options like this enter the marketplace for Canadians. Vanguard is one of many ETF providers that are giving Canadians more low-cost passive investing options, and there'll be many more to come in the future. But this is one of the pioneers, I think. So all in all, I give it a WealthAwesome score of 4.5 out of 5. The pros are that it's very simple and effective. It self-allocates, so there's no need to rebalance. Has a very low MER, is easily accessible by even beginner investors, and it has worldwide exposure to thousands of stocks. The cons is that it does have a home bias and it invests a lot in Canada, slightly higher fees than competitors, and the rebalancing benefits aren't as useful for an all-equity ETF versus one with some fixed income. And in summary, VEQT is a 100% equity ETF portfolio for Canadians. Alright guys, if you enjoyed the video, make sure you like and subscribe to the channel. I'll be putting out fresh new content every week. Also, be sure to check out the blog, wealthawesome.com. It's one of Canada's fastest growing personal finance blogs, and it goes into this topic in way more detail and also has many other topics for Canadians to take a look at. So make sure you check it out. And as always, thanks for listening.